My name is T.W. Woodward. Today, we have Mark Schoenrock, an ex-executive from LifeTouch. Mark has 25 plus years experience in the photo industry. As VP of Photography at LifeTouch, Mark led innovative initiatives to provide a new customer experience. Mark is currently the president of PSP Consulting. We are happy to have him here today. Welcome, Mark.
Thanks, TW, and thanks all of you for joining in today. Well, as we all know, the competitive landscape in volume school photography is changing. A lot of people in the volume industry have been curious about the acquisition of LifeTouch by Shutterfly. So in this brief webinar, I'll share my perspective on the deal, what it may mean to the future, and my opinion of the impact on the industry. In fact, I'm going to attempt to answer the question, is this acquisition transformational or not? First, some background information on the industry and LifeTouch. LifeTouch was privately held through an employee stock ownership plan, ESOP. The plan was used as a retirement vehicle for its employee shareholders. Over the years, tens of millions of dollars have been required to pay out the share value to retiring employees. It's referred to as making repurchase obligations. Now, I believe it's likely that the burden contributed to lower levels of internal investment and perhaps even negatively affected LifeTouch's ability to innovate. Meanwhile, consumer behavior and the needs of the school continually changed out there. Participation rates in the industry declined. LifeTouch, like many, felt the impact of this decline. In general, it took more to get less. In other words, more schools, more commissions, more services from photographers to get less, to make up for the declines, to offset the fact that it took photographing more students to match historical financial results. Well, fast forward, and LifeTouch decides on a new strategy for its future, one that many in the industry used over the years, to sell the business. Ironically, it was LifeTouch that did much of the buying in the past. But who buys the buyer now? The answer now seems obvious and brilliant. Shutterfly. For those who are not that familiar with Shutterfly, Shutterfly is the leader in ink-on-paper personalized photos and services. They provide a platform for customers to create photo books, custom stationery, home decor products, and photo gifts. They also own an online photo and video equipment rental business. Well, the sale closed in early April, and the first installment of the proceeds was paid to the shareholders in early June. That's that ESOP obligation I was referring to earlier. There is a second obligation that'll be required a year later. So this is going to free LifeTouch from being required to fund the ESOP into the future. And the plan itself is going to be terminated after the approval of the IRS. For those interested, Shutterfly has introduced a 401k in its place. So the point here is that the ESOP was a major financial drain that probably hurt the company's ability to invest. Well, that's gone now with the Shutterfly purchase. Well, let's look at some of the 2017 financial results for these two businesses. Shutterfly is the market share leader in their segment. In 2017, they reported revenues of $1.2 billion. Listen to this, folks. 10 years earlier, in 2007, their revenues were $187 million. So that's over $1 billion of growth in the past decade. They report 10 million customers, and they have a 75% customer return rate. LifeTouch, on the other hand, is the market share leader in their segment. And in 2017, LifeTouch reported $952 million in revenues. By the way, the company's sales have been steadily declining. In 2015, they were over $1 billion. In 2016, just shy of $1 billion with $987 million. You can see the stats reflect significant market share along with a 91% school retention rate. 74% of that business is school related. The remainder is their portrait studio and church divisions. Shutterfly's pro forma, their forecast of the anticipated result of this transaction, is $2.1 billion in revenues and $375 million in EBITDA. What's EBITDA? Earnings before interest, taxes, depreciation, and amortization. It's an important number for investors. By the way, Shutterfly forecasts 12-month sales of $935 million for LifeTouch, so they anticipate a little bit of a continuing decline in revenues, but they expect that to change in 2019. I think it's interesting to take a quick look at Shutterfly's stock performance since the announcement of the acquisition. It's been quite a ride. On January 30th, before the announcement of the LifeTouch purchase, the stock closed at $53.32. On the day of the announcement, Shutterfly stock soared to $86.41. On April 3rd, the deal closed and the stock remained at a lofty $78.39. That's important because oftentimes, after an announcement like this is made, the stock will see a fairly significant decline. Well, this didn't slip much, but listen to this. The stock is currently trading around $91. So what's going on? Other than we should have all invested in Shutterfly before the announcement, well, what's going on is that the market believes the price paid by Shutterfly is lower than the boost that the acquisition will provide the company's earnings per share. What's that mean? In other words, investors believe Shutterfly got a really good deal, that they will successfully execute the integration of LifeTouch, and that the combined companies realize better earnings together than they would separately. LifeTouch's results will now roll up into a publicly traded company. It's going to be interesting to see what it means for a formerly privately held company to have quarterly reporting pressure with active investors. What is Shutterfly saying about the acquisition and the future? Chris North, CEO, during an interview with Goldman Sachs stated, "The companies were born to be together. Each company helps the other company better serve its customers and therefore accelerate its strategy and accelerate its revenue growth." On the investors' call in early May, North reported that LifeTouch's business had shown solid performance in their school and studio businesses, partially offset by a weaker performance in their church business. He also said that LifeTouch achieved a modest increase in school accounts for the first time in recent history. So what's the underlying premise for Shutterfly buying the nation's largest school picture company? Well, first, it is Shutterfly's access to LifeTouch's 10 million households of image-active consumers. Shutterfly and LifeTouch share a complementary customer base, and LifeTouch's customers are precisely the customers Shutterfly most wants to acquire. Second, Shutterfly wants to leverage LifeTouch's digital content, over 25 million images, into sales revenue. As such, they are committed to fund areas in which LifeTouch has underinvested, such as online ordering, mobile optimization, and product choice. Michael Pope, CFO, stated that they are focusing on accelerating the development of LifeTouch's online ordering platform. As a result, LifeTouch and their consumers will benefit from an improved e-commerce capability that includes a simplified user interface capable of creating products on Shutterfly's mobile app and website. 27% of Shutterfly's revenues come from mobile devices. Mobile active customers result in a higher ROI than customers acquired on their website, and those customers demonstrate higher loyalty year over year. Daniel Newman from Futurum Research shares the top 10 trends driving the future of marketing. First on his list, you got it, mobile. Mobile is going to become the center of marketing. The evolution of mobile devices is one of the prime factors influencing the marketing world, he says. As the focus is shifting to smaller screens, brands will be able to strike up a more personalized relationship with their customers by leveraging the power of mobile. Shutterfly's technology instantly brings the e-commerce capability and experience that today's parents expect when and where they want it on their smart device. With an online ordering platform, LifeTouch can now promote credit card security free from the traditional paper method. We should also see improved customer marketing with added customer touch points, increased product variety, and more cross-selling opportunities. Here's an example. LifeTouch, as is true with most school photographers, has a limited number of touch points with the consumer, generally capturing one sale and, if lucky, perhaps a reorder. I call it a one-and-done model. Now consider the potential of having all of LifeTouch's images uploaded directly to Shutterfly for purchasing. Imagine, through Shutterfly's photo management service, a seamless process by which LifeTouch customers will, in addition to the portrait package, have access to an attractive portfolio of personalized products, as well as the opportunity to add their personal portraits. Shutterfly's product arsenal and product personalization will give LifeTouch's customers choice unheard of in the traditional school picture package, and frankly, online through most school picture companies' websites. Shutterfly can help LifeTouch shift from the one-and-done approach to multiple product sales from one image. Shutterfly announced its intent to unlock barriers to the launching of new SKUs faster. That means more new products faster, not just the refreshing of existing products. And with a 75% customer return rate, they're going to monetize LifeTouch's customer into the future. More importantly, I think this means that the customer lifetime value increases, and as such, less profitable schools can become more profitable over time. Shutterfly has mapped out a go-to-market strategy that engages the consumer through multiple channels. They've announced that this includes social media, email, mobile, print, direct mail, radio, video, search engine optimization, and public relations. I don't know if there's anything left. Now here's an example of a LifeTouch promotion featuring unlimited free photo storage. The vision is for Shutterfly to be present for every important milestone and celebration of their customer. K through 12, kindergarten through 12, graduation, holiday and seasonal, wedding, church, birth, and preschool. That pretty much sums it up. This July, Shutterfly announced the launching of a new category, Shutterfly Kids. Shutterfly Kids is a natural extension for Shutterfly, as it sharpens its focus on photos and personalized products. Shutterfly Kids offers a variety of products for children ages 4 to 14, including school gear, kids' room, travel, toys, games, and tableware. This new category seems like a natural and frankly a beneficial product extension for LifeTouch's customers. Well, let's move to another benefit of the acquisition. In addition to revenue synergy, Shutterfly is also planning on cost savings. The newly transformed company forecasts $50 million in savings as a result of the acquisition. Both companies are vertically integrated. The addition of LifeTouch almost doubles Shutterfly's scale, providing the means for Shutterfly to renegotiate vendor contracts. The acquisition may result in some capacity utilization opportunities for the two businesses as well. LifeTouch operates 9 predominantly silver halide plants with peak seasonality in September and October. And Shutterfly, which historically outsources its silver halide printing, operates 3 ink-on-paper plants with peak seasonality in November and December. Shutterfly plans to take orders from both Shutterfly and LifeTouch and route to the appropriate production facility. LifeTouch has a unique opportunity now to leverage Shutterfly's printers and platform for memory books and yearbooks. This could lead to new and more creative yearbook formats in the future. So how's the integration going? Michael Pope, CFO, reported, "We're very pleased with the integration. I think we are taking a measured approach. We put resources against it on both the Shutterfly side and on the LifeTouch side, and it is progressing nicely." Chris North made it clear that they are not doing anything that could endanger the core selling season for Fall Picture Day, and that they are focusing on a small number of the largest opportunities. He went on to say that there is more opportunity to work on the customer experience when we get into 2019. Well, I expect a divide and conquer strategy with Shutterfly focusing on the back end and the consumer, thereby freeing up LifeTouch to focus on the front end and the host. Bottom line, Shutterfly expects LifeTouch to deliver digital content, lots of it, to feed the back end. That means LifeTouch's primary job is to get more accounts, get more schools. Well, let's quickly review. LifeTouch has 10 million households of image active consumers and over 25 million images. LifeTouch and their consumers will benefit from an improved e-commerce capability and Shutterfly's photo management service. Shutterfly is committed to fund areas in which LifeTouch has underinvested, such as online ordering, mobile optimization, and product choice. Shutterfly can help LifeTouch shift from the one and done approach to multiple product sales from one image, thereby improving customer lifetime value. Shutterfly's newest category, Shutterfly Kids, is a natural product extension attractive to LifeTouch's consumers. In other words, combining all of this, less profitable schools can become more profitable over time. Shutterfly's go-to-market strategy engages the consumer through multiple channels with the vision to be present for every important milestone and celebration of their customer. This is important to consider. Shutterfly has been open about its intent to engage the consumer differently than school photographers have, and to be present for every major milestone in their customer's life. Again, different than what school photographers have done in the past. LifeTouch uses the tagline, photography for a lifetime. And now, Shutterfly's intent is to monetize LifeTouch's customers for a lifetime. So, is this acquisition transformational? You bet it is. Thanks to Shutterfly, we should see a revitalization of LifeTouch's industry leadership on the consumer side. And largely because of pressure to perform, I think we can also anticipate improved focus and execution on the account sales side. In fact, it has already begun. I think both companies need what the other company provides, that they are stronger together than apart, and as such, the acquisition will have a measurable impact on the industry in 2019 and beyond. I believe we'll look back at 2018 as the year in which a shift, a disruption in the industry occurred. Now, some will see it, and they'll respond. Some will see it, and they'll dismiss it. And some will simply miss it altogether and wonder what happened. Those of you who know me know that I subscribe to the philosophy that if we fail to innovate, we will evaporate. LifeTouch and Shutterfly are showing the industry a new way to compete and to meet the needs of today's evolving customer. How you respond is up to you. Well, thanks for joining me today. I hope the perspective I've presented has been informative and thought-provoking. And thanks to my friends at CaptureLife for providing me with this opportunity and format to share.
Thanks, Mark. As an independent photographer, this looks pretty scary. Is there an opportunity for independent photographers to compete?
Boy, what a great question. And the answer to that is absolutely. This is a great time to be in the industry if the photographer pays attention to everything that's taking place. What I mean by that is there are tools and resources and strategic partners out there that a photographer, a small photographer, a medium-sized photographer can align themselves with in order to respond to the new emerging competitive landscape. It takes being creative. It may take a little bit of risk, but yes, a small and a medium-sized photographer can clearly compete. In fact, there's some advantages to small size. We don't have the time to get into all the detail, but if I was entering the business today, one of the first things I'd do is align myself with a handful of key strategic partners, vendors out there who offer solutions that I think not only compete with what the big guys can do, but in some cases can provide a competitive advantage.
Thanks, Mark. We did get many questions during your presentation. Unfortunately, we are out of time for today. I will forward these questions to Mark so he can answer them via email. Thank you, Mark, for providing this insight into these major changes in the photo industry. And I want to thank everyone in the audience for joining us.